Correct. True. Yeah, I think I'm getting you. I think you put it very rightly that you can't again give the right answers to everyone, and not everyone would understand what the answers that you're giving are right or wrong, right? So I think that is a very fine line. So let's move on. You know, let's move on to the questions that we have. We have
Yeah.
a couple of questions, so we'll go on with the first question. Does app personalization matter in investing?
Hi, Navneet. I think it does in the sense, yeah, again, we are about to, when it comes to transaction related information or what is personalized, and you want to see your portfolio, so definitely personalization would work there. If you're looking at just educating, again, there are some apps which will keep showing you, if you selected, let's say, show me topics on investing, insurance, and crypto, then I only want that, right? Don't bore me with, let's say, taxation. So I think, personalization will always be there, and, not just in finance, but it's, is it necessary? Sometimes, a common topic makes sense for all of us. For example, anybody listening into this call today, assuming if you're a professional working, how to save tax is going to be important and you should be aware of it. So in that sense, there's no real need to personalize and say what it is. Now, very specific subtopic within it saying, should I maximize my HRA allowance or should I take some more? That will comes back to what I was saying. It will be, this is your situation, right? If you're paying rent to your parents, then I don't see much of an issue because money is within the family as such. But imagine just hiking your rent because you get some HRA allowance, but the money is going to be going to a third party. So yeah, personalization will be important. You don't want random information, especially when we have limited time at our disposal. So if I open my app, I want it to tell me exactly what's relevant for me. And for example, if I'm a trader, and if I look at 5 stocks a day and see where it is, the watch list should tell me those 5 stocks. Don't bore me with who's the top seller today, buyer. Some of which is available as data, but I've not used it, so don't bore me with that.
True. Great. I hope Navneet that answer or sorry the question has been answered. Moving on, Vishwajit is asking us as a beginner, should I invest in mutual fund or index fund? It's a tough question, but what would you say?
Mr. Jit, I think first you just clarify, a mutual fund can also offer an index fund. Okay, a mutual fund is a wrapper or it's a company which runs multiple strategies. One of the strategy could be an index, one which is what is called passive investing, and the other is active funds. Within that, we have another 20 subcategories. Right today, index. See, what I'm saying, index is said, or index is the solution to everything. But there are at least 500 index funds you can pick, right? And I'm talking from provider's point of view. Also, you have a large cap index, which is Sensex, yeah, Nifty, equal weight, yeah, not equal weight. Next 50, next 100, alpha, low vol. These are all choices. So, so just to clarify, mutual fund can also offer all of this. People have a perception that mutual fund means only equity. No. For beginners, especially, there's a very good product category called a balanced fund or a balanced advantage fund, which gives you a much more smoother ride for the first few years to understand how it works. And you can go to the extreme end of mutual fund small cap investing, where you can see your portfolio minus 20 and plus 20 as well. But yeah, to give you a very simple answer, I think it always makes sense to start with something simple that you understand, which you can hold for a period of time to see how it works. And then, you slowly customize your portfolio basis what your need is. So you could start with a simple index fund, Nifty, Sensex, doesn't matter much. Or you could do, uh, a mix. For me personally, I would say looking at something like a balanced fund makes sense. It offers you both debt and equity within the same thing. And generally, it's a good first time use product, and then you evolve from there.
Makes sense. Makes sense. So just one last question before we end the session, Karthik. So we all work on our physical fitness, but how do you work on physical fitness? That's the question from Akash.
Akash, I think, see, the understanding behind physical fitness was, yes, there's a lot of attention today we give to our physical health, and right, it then moved to mental health, whether that's meditation, yoga, that kind of a thing. But when it comes to money, I think a lot of us tend to just be, just laid back and say, let whatever is happening is happening.
Hmm.
A lot of first time investors invest basis somebody who sat next to him in office. See, generally speaking, this is the flow, right? In Jan Feb, your HR asks you to submit some proofs. You turn around, array, what should I do? And somebody just says, you know what, my uncle told me to buy this. So your uncle told you to buy it basis his understanding. Now you've also bought it. So we don't really actively put our thought into it. That's like, walking into a gym and you see, a bodybuilder next to you doing something, saying, hey, even I should copy it.
Yeah. Hmm.
What happens? You come back with a broken back after a day or two because that's not what you should do. However, if you go in through a gym trainer who does an assessment. So when it comes to physical fitness, I like to split it up into very simple three steps. Like it's the 3D method that I use, which I say is a dream, you design, and then you do. Very quickly, what is it? Dream means I set my goal. What am I trying to do? I need to save money for A, B, C, D, E. Five goals I have in life. One is retire in 20 years. One is to send my kid to the school. One is to buy a house. Whatever. We all have certain goals. So I list them down. I understand what my goals are. I then need to design or make a kind of working around it. If I have to get to 1 crore number in 5 years, roughly how much should I save per month? And these are very simple calculations. I am not trying to predict interest rates when Russia will go to war with China or when China will come to war with India. That's beyond my understanding. But if I have to, grow my money at 8%, 12%, or 14%, or 16%, that's something I need to calculate and then finally implement. So what does that mean? If I need my money to grow at 8%, I need to go to a bank and use a fixed deposit, use some debt mutual fund, or use something like that. If I need my money to grow at 12%, I can't really keep it in my fixed deposit and hope for some miracle to happen.
Correct.
I have to move into the equity side of things. And if I need 15%, then I can't really be being super safe. And definitely, if I need 20-30%, then I'm doing something wrong. I'm being unrealistic because the markets can give you 14-15%
Hmm.
on a long-term basis. So you break it down into these three blocks, and I don't know what field you come from, but that's what we do, right? I mean, if you're a software engineer, you would assess, what am I doing? Where do I have to get to? How much time do I have? And what should this eventually be? Same with healthcare. You go to a gym, you first assess, okay, I want to put on weight or I want to lose weight. I want to add muscle. Okay, I want to add muscle means, so what should I do? Okay, this is the workout, this is the diet. Do the same with your investing. Assess what your goal is. Find out what works for it. And actually, the most important one is there will always be a negative, you know, noise around you saying, "Don't do this. Wait, don't invest now. Wait till this." So just go ahead and invest because at the end of the day, deep down humans, and the chart is always going to trend to the right and up. Sensex will go upwards. It's like trying to ask you 30 years from now, will Sensex be below 30,000 or will it have an extra zero? You're more likely to have an extra zero than go below 30. So I think play that to your advantage. Get started as quickly as you can because compounding loves as much time as you can give it, right?
Great. I think Karthik, that's a quite elaborative explanation that you've given. So I'm going to quickly take away the three, takeaways, from this session. But it is about understanding what your risk appetite is, taking information, in the right way, and then executing it in the right way. Second is to keep it simple, transparent, and finding a platform which is trustworthy. And the last, which you just ended up saying, that dream, set your dream, decide what you want to do, how you want to do it, and then do it, because doing it is also important as much as
Exactly.
dreaming as well as deciding. So
Correct.
with that, thank you everyone who has been watching this particular session. We had planned for a very short session, but I'm really happy that we could discuss so many different things. So on that note, Karthik, thank you so much to be
No,
part of
thank
this.
you for having me on this.
Yes, and we would definitely love to have you once again on our platform to discuss something else.
Would love
So,
to.
to all
Sure.
our other viewers out there on any of the social media platforms, if you want us to discuss on a different topic, please do let us know in the comment section, and please do subscribe to our YouTube and our LinkedIn pages as well as our Instagram. So, with that note, thank you so much, and be financially happy and be safe out there. Thank you so much.